Well, good morning, everyone. Today is Tuesday, August 13th, and we're looking at the S&P E-mini. The market's going to open about an hour. The market is going to open up in about an hour and 23 minutes. And this is the futures. We closed right here yesterday at this bar right here, where the low was 28.7250, and today we already broke the low intraday overnight. Nothing new on China. The trade war is not getting any prettier. And we're headed to the 200-day moving average. That's this line right here. Now, typically, the stock market bounces hard when we get to the 200-day moving average. But we're not there yet. We're in what I call the twilight zone. We're between the 50-day and the 200-day moving average. We're in a slightly panicky environment. Let's look at the VIX. This is the fear index. This gauges short-term volatility. And we're above 20. Typically, VIX let me set up a different chart here so you can see what I'm talking about. It's easier to see it on a intraday chart. If you look intraday, VIX is now above 20. 20 is a panic level. Once you see VIX above 20, that means market is scared or getting scared. Below 20 means the market is complacent. And here's what I want you to look at. If the market continues going lower, here are the assets you should be looking at. GLD, gold. Whenever the market goes to the 200-day moving average, gold tends to spike. Let me change the settings back. All right, that's the gold market. You can see it's been rising steadily since we've been trading below the 200-day, below the 50-day moving average on the stock market. Another asset you want to look at is the long bond, TLT ticker symbol. It rallied hard yesterday and it took out the high. And lastly, the SD, which is SDS, ultra short S&P. Notice we're starting to see upside here. If we break above the 200-day, that's the 200-day, that's telling us that the market's bearish and you want to trade inverse ETFs. These do the inverse of what the SPY or what the S&P 500 does. And lastly, if you're looking at sectors, the sector you want to look at that's going to give you the best bang for the buck is the utility sector. And if the stock market moves to the 200-day moving average, expect utilities to start breaking out and trade above the 61.40 level. So again, if the stock market continues going down, there's a good chance it will towards the end of the week, at least for another few days. You want to look at gold, GLD. You want to look at SDS. That's the inverse SPY. That's the inverse S&P 500. This does the opposite of what the stock market does. You want to look at TLT, which is the long bond. That rallies when markets are slow or stagnant or falling down, especially when the Fed says no more lowering rates till at least the end of the year. Not pretty. That means, remember, interest rates are inverse. So if interest rates go lower, bonds go higher. And as you can see, bonds are making highs right now. Let's look at a 2-year chart. Let's look at a 3-year chart. Look at this. We just broke out of a 3-year high on a weekly basis. That's 3 years ago, and that's the breakout level right here, and we're trading right here around the 142.97 level. And again, if you're looking at stocks, look at the utility sectors. That's XLU ticker symbol. And if you want to know what stocks are in the utility sector, you could just go to bar chart, type in XLU, like I did here, and then you just scroll down. You go to constituents. Constituents tells you all the components, and it even tells you the percentage. So it tells you by market cap, because remember, U.S. stock indexes have capital weighted sectors. That means the bigger the stock, the more influence it has in the sector. So Duke Energy, Southern Company, Dominion Energy, those are the big ones. So here's all of them. And again, let's now look at the SPY, which hasn't opened yet, but it is going to set to open lower. It's already down it's already down this morning. Let's just go here, take a look at stock market overview. That's the weekly basis. Let's look at it on a daily basis. And again, it looks just like the E-mini, except the E-mini already broke the low. The SPY hasn't. Expect us to open around the 286 level. We may head a little higher, head a little lower, but I don't think we're going to touch the 50-day moving average or the 200-day moving average, at least not till the second part of the week when lots and lots of Fed data comes out. You've got Fed data on Thursday and Friday, big Fed data on Thursday and Friday. Till then, expect us to sit tight. The markets right now pre-open at 287.20, which is right around here, right around this level here. So again, don't expect too much upside. Expect us to kind of drift, expect volatility to be higher, and start looking at defensive assets, the ones I've outlined for you. I will talk to you guys later. I hope you have a great